What is it?
Hegemony.
Hegemony.
Yeah.
What does it mean?
Or hegemony. It means dominance
In what language?
in English.
Okay. Hedge money.
All right, let's get in. On the topic of hegemony or hegemony, US dollar hegemony or hegemony is, or if you're Kev, hedge money, has taken a hit, I would say. Russia's officially announced that the BRICS currency will be backed by gold. I believe at the BRICS summit in August, there'll be a lot more details coming out. There's a vast majority of the global GDP that now sits behind this BRICS currency with, I think, up to 41 countries now looking to join. So definitely some dollar dominance loss here. We'll look into see how that impacts the charts as well. I just wanted to go into, let's do a 1 minute macro update. All right, so looking at the Fed's balance sheet, the Federal Reserve's total balance sheets decreased by 42.6 billion thereabouts and now stands at 8.3 trillion US dollars. Securities held outright by the Federal Reserve have also decreased by 38.6 billion and currently sitting at 7.65 billion. So QT is working. Obviously, we had that uptick with the bank failures in March. But I think the bank failures are quite an interesting topic because it has disappeared in recent months. It was a big financial media headline, and since then there's no real discussion on it. And I think this works in the Fed's favor because it's allowing them to organize themselves a lot better. And look, it comes down to media manipulation. But if we look into the perspective of the 2007, 2008 financial crisis, and let's call it the 2023 financial crisis, the 2008 crisis saw a total of 25 banks with $373.6 billion in assets fail. We're in 2023, and we've now had a total of 3 banks with 548.5 billion in assets failing. Far smaller in terms of how many banks have failed, but grossly large amounts of assets that are lost there in just a small minority of banks. And I don't think we've actually even got started, which I guess leads me into a bit more on how the Fed's managing all of this. They're using a tool, the discount window, which has been around since 1914. And they're also using the bank term funding program, BTFP. So you can see the BTFP was something that was created in March in response to all of the failures. And essentially, it's providing anonymity to banks to fill the balance sheet holes that they have. So the discount window and the BTFP are both means by which financial institutions can borrow from the Fed, emergency liquidity. So as I said, look, that discount window, if we go back here, has been around since 1914, huge amounts of data there. And here on the BTFP, just from March. So this was created in response to the banking failure, as I was saying. The discount window offers short-term lending, much shorter term than the BTFP, and that only exists for about 90 days, where BTFP is very generous. So banks can post collateral. That collateral is in the form of, guess what? US Treasury bonds, agency MBS, etc. And essentially what this means is that the Fed ignores all the market price fluctuations, and it was designed so that the banks are not forced to sell any underwater assets. So it's impossible for banks to technically fail because the Fed has taken all of that liability. And when the Fed takes all of the liability, the people have taken the liability. So essentially, this is a way of opening up QE without actually saying we're in QE. So we're tightening interest rates, we're increasing interest rates, tightening the balance sheet, but we have this huge window of operation. And as this financial crisis really gets underway, and we're really moving quite slowly now, this is only going to get quicker as the US dollar starts to lose dominance. And I think in August, we all see a lot more clarity on the BRICS currency and where that's going to go on the roadmap to doing so. But this isn't a new process. This has been going on for years. We've had US dollar dominance in cross-border transactions been falling, and more recently we've seen yuan dominance increasing. So it's only a matter of time before this really starts to accelerate, and steps that the Fed have taken now are really just a short-term band-aid on what is inevitably a problem that's going to be the end. And this will be rampant for inflation. And so let's look at the chart. Burger of bad news today.
Maybe we jump into the chart side of things. So as you can see, we're still trading on the monthly chart. We're still trading within this descending triangle we've been keeping our eyes on over the last few weeks. So price at the minute, we've seen this retest of this trend line and this area where we established resistance previously. We're now starting to trade below this 103,500 area. So as you can see on the monthly, we're still making lower highs, lower lows, trading down in this triangle towards this neckline here, this important area of support around 101,500. Still, if we look at the weekly, as we see, price was trading within this channel, coming up towards. So this is a counter trend move up towards this area of supply and demand that we mentioned, and this trend line. So we've seen price come up. We've established resistance where we once had support around. You can see for the week we closed out. We tapped that area, and then price is closed out below this previous level of structure, and just about managed to engulf that previous candle. So we are seeing a bearish engulfer just about, we say it's closed below the body and the wick of that previous candle. So we've had the retest of that area. Now we can expect price to start moving back down towards that 101,500 area. So we go down into the daily chart. You see, this is what we were paying attention to last week when price was trading within this channel on the daily. And now we've got this double top area before breaking out of this channel and breaking through this previous level of structure. So you can see, excuse me, once we had this area over here, established resistance, pulled back inside this channel, tapped the bottom of it, respecting that channel running up, and then we came up and we grabbed liquidity from that 103,500 area again, giving us this double top area before price broke and closed the day outside of that trend line. And then we'd have a retest of that trend line on a smaller time frame before, as you can see, a lot of bearish volume came into the market. We've seen quite a sizable move on the Friday. Obviously, we had the fundamentals, NFP coming in weak for US dollar. So just after break of this channel that we've been trading bullish within this channel on the daily, and then we can see prices broken through all that structure, broken out of that channel, and now we can expect a retest of 102,700 area. I'll be expecting a retest of this area here, 102,700, before price makes its way back down towards that 101,500 area. So that's just one to pay attention to this week on the DXY. Obviously, we're starting to go bearish, breaking this counter trend movement that we're seeing. Obviously, on the higher time frame, we're bearish. we've seen this bullish movement on the daily, but obviously it was come and retest these areas at 102,500. Now we've had that retest, we've had the break of that channel. We've broken through this area of support at 102,700. As I say, expecting a retest of this area before starting to trade down into 101,500. And then obviously, as we've mentioned over the last few weeks, if price does give us this move to the downside and then we start to break 101,500, then we could see the DXY trading all the way down into the 99 region. But yeah, that's one to watch on the DXY. Yeah, just obviously you've got a few fundamentals to watch out for this week. But yeah, I'll be waiting for the DXY to come and approach this 101,500 area and see what happens around that area. That's the outlook on the DXY for this week.